Modern monetary theory is not modern and is not a theory. It's a complete science fiction joke that everybody should acknowledge is based on an absolute fallacy, which is that all and every government spending is reserves for the private economy, which is completely ludicrous, and that deficit spending is actually positive because it creates reserves for the private sector. Reserves are only called like that, reserves, when the issuer is solvent and when things are improving, certainly in the level of solvency, but also in the level of confidence. Fiat currency is about faith. And faith, my friends, in the Keynesian experiment of Japan is falling rapidly. Let's look at the next graph and we'll see what is happening with the yen. The yen is at 40-year lows relative to the dollar. And obviously, the dollar is losing purchasing power. So, what has happened in Japan is that the Bank of Japan needs to abandon its policy of negative interest rates and as well the policy of yield curve control. Why? Because demand for government bonds is collapsing. With the arrival of inflation that they so hardly tried to achieve, what happened was the demand for bonds collapsed. And there are numerous elements that are crumbling like a domino. Number one, the Japanese government is already spending 25% of its budget in interest expenses. Number two, debt increases can only be refinanced properly when there is a real positive return in that debt. So, combating deflation has actually destroyed the confidence in the currency and obviously in the debt. It's the same thing. Fiscal, monetary policy are one and the same. Furthermore, the Japanese economy has been a massive importer of saving in US dollars. That is changing as well as the economy is worse in terms of real productivity growth and in terms of real wage growth, loss of purchasing power for citizens. So ultimately, printing money always creates a problem. You may say, oh, this has been going on for decades. Why is that a problem? Why is it a problem now? First, because many people think that a couple of decades is a norm when it is simply a very, very, very short and small element of information in the history of money. And the history of money tells us that no, it is not true that a government can spend and deficit spend as much as it wants when it is monetary sovereign, because monetary sovereignty, as we are seeing, crumbles very quickly and depends on the ability to attract investment and reserves, which are, in the case of Japan, US dollars. Ultimately, 2 plus 2 never equals 22. Let's go to the next graph, which shows us why the fallacy of the soft landing is so clear. I mean, it just doesn't make any sense, this concept of soft landing. The biggest increase in consumer delinquencies since the global financial crisis, courtesy of Net Davis research. This massive increase in consumer delinquencies adds to a massive increase in bankruptcies in small and medium enterprises. Those two things added to the wall of maturities that we have expressed and mentioned so many times on this channel are things to be worried about. There is no such thing as a soft landing. When they talk about a soft landing, it means a significant decline in aggregate demand from the consumer and from small and medium enterprises, i.e. the destruction of the private sector, while the public sector continues to bloat deficit spending. That is what they call a soft landing. And it's not soft, it's certainly a landing. Let's go to the next graph, which shows us gold is money and everything else is credit. Rising demand for gold, normal. Currency debasement is what we are seeing and what we are likely to continue to see in 2024. Now, This rising demand for and inflows into gold ETFs only is the tip of an iceberg, because if we look at the next graph, in the next graph what we will see is that gold continues to be the only decorrelated asset relative to fixed income and relative to equities that allows us to have real positive returns in an environment of currency debasement. Bitcoin is still not there yet, because it's not yet a reserve of value, unit of measure, and a global mean of payment. But it's on its way to get there, because the evidence of currency debasement is absolutely phenomenal. Let's go to the next graph, which shows us the reality of Chinese profits. Chinese profits continue to be extremely weak, fundamentally because of the construction and the real estate sectors, all of those that are directly or indirectly impacted by the burst of the real estate bubble are certainly being affected. And this is one of the reasons why we see multiple compression in China. However, there are also sectors that are doing very well. Value-added sectors continue to grow their earnings and way above previous estimates. So there is a huge difference between the old economy, real estate, state-owned enterprises, construction, and the new economy, high added value, technology, etc. So that's where you have to pay attention, not to the overall index, which continues to show the significant imbalances and challenges of the Chinese economy, which are obviously evident, but let's remember, it's the only global economy that is going to grow its GDP in the middle of a massive real estate bubble burst, unlike what happened in the United States, in the UK, in Spain, in Sweden, in Japan, etc. Those things do matter. Thank you so much, and keep defending freedom.